That's amazing.
What's the Tim name again? What's the Tim name again? What's the name of it?
Driving and watching the webinar. That's dedication right there. Okay. All right. So we're going to go ahead and get this started. You know, anytime I do a webinar, I like to get straight to the point. You know, no hype, nothing crazy. So, Venna and Rawling, I have Dean. Dean has been a student of mine for how long, Dean?
Oh man, it's been a long time. Almost 9, 10 months.
9 to 10 months. He came into this market not knowing anything. He didn't know anything about trading Forex.
That's true.
You know? Yeah, it's probably been more than 9 to 10 months, Dean.
Yeah, a long time. Almost a year and a half, man.
Almost a year, you know. So you would think that Dean is a, you know, but he's getting there. But anyway, guys, Venna and Roland, how long you guys been trading?
Well, we haven't actually started trading. We're just learning the ins and outs.
Okay. All right. Perfect. All right. So what you're looking at right now, you're looking at a whiteboard that I have up. And what I'm going to show you is the exact movement in the market. Okay. The exact movement that happens every single day in the market. All right. I'm not going to show you no indicators. I'm not going to, because to me, I don't like trading with indicators. Indicators take your focus off of price. When you start, indicators are those things that's at the bottom of the screen. You know how they had the moving, the RSI and all of the other stuff
Yeah.
at the bottom of your screen. I don't want you to focus on that. Okay. Because when you focus on this has to go up to this level and then this has to go to here and then the market has to cross this and that, scratch it. I don't want you to focus on that. That's a distraction. Okay, that's a big distraction. What I want you to focus on is price. Price moves up, price comes down. Price moves up, and then price comes down. Okay. Yeah. So after price moves down like this, it goes up. Then it's going to come down and it goes up again. Now, here's a question for you. You may have heard about this before. This is called the M formation, the letter M. Have you ever heard of that before?
Yeah.
No.
Okay. Yeah. Where the market does the letter M, and then this is what? The letter W?
W.
Yeah.
Perfect. All right. So at least we're not going back to the basics. You know, this is, you guys are... I like the fact that you're not that brand new. That I have to go way to the back. Hey, Dean, just mute yourself out real quick.
All right.
Perfect. So what I want to show you guys is what the market does on a daily basis. Now, whenever you see a huge candle breaking out, when I say a huge candle breaking out from a zone, I'm talking about from the support area. And we're going to write this down the bottom. This is going to be my support. Come on, text. All right, so we're going to make this support. I'm going to put this right here at the bottom. This is going to be our support. And right at the top is going to be our resistance. Okay, so support is the bottom, is the floor, and resistance is going to be the ceiling. So, Venna, you and Rolling are in a car right now.
Yes.
The ceiling in the car is resistance. So if you put your hands up in the top of the ceiling, what's going to happen is you're going to get rejected. You're not going to be able to go through. That's like the floor. You put your feet on the floor and you try to stump. As hard as you want to, you're not going to be able to break through that floor. Your foot is going to get rejected and bounce back up. Well, that's what the market does when it hits support and resistance. So when you see a huge candle breaking out from the support area, the market is going to give you, okay, the market is going to give you 50% of that move back.
Okay, so it's going to bounce back halfway.
Yes, and there's a reason why it's doing that, okay? Now, right around this area here, let's say right around this area, there was, because you know the market is $5.5 trillion per day.
Right.
Okay, let's just say it was $100,000 sitting at the bottom. Okay, $100,000. It was $100,000 sitting at the bottom right over here. Okay, right around this zone here. Now, this is where all the sellers are. Okay, you got a whole bunch of sellers, but it's $100,000 worth of sellers orders right in this zone here. Okay, now right in this zone, we got $300,000 worth of sellers in this zone. And then right over here, you remember that $100,000 worth of sellers over here? Well, we had another, let's say $500,000 worth of sellers sitting in this zone. It's going to make sense in a minute, and it's going to blow your mind because it's disgusting the way the market moves and the way they trap people, okay? These are all sellers on the bottom, right at support. So when that market broke out of this zone here, all of the sellers, they're ready to jump off a building because they're losing money. But why did the market come back down right to this zone? Because it was more money. It was more money sitting in this area. So they decided, say, we got to go back and get more money. But to the sellers that was right here, remember the sellers that was in this area? They saying, okay, I'm down $50,000 when the market went up here. I'm down $50,000. Oh, the market is dropping back down. The market is dropping back down. So what I'm going to do, instead of me exiting the trade and taking my loss, because you see in the market dropping back down, what are you going to do? You're going to put another order to sell. This is a big mistake that most traders make. They put another order.
Oh,
Say that again?
should you write it out?
Oh, no, I'm going to show you why you shouldn't.
Okay.
I'm going to show you why you shouldn't right now. So you're already negative right here. The market goes up. Because there's so much money down in this area on the bottom, you're thinking, oh my goodness, they're going to give me my money back. So what they do is they drop the market far enough, and you're thinking they're going to give you your money. Now you put another order to sell. But what happens next? They pull the market back in the opposite direction. Now you have two orders, selling orders. So now guess what happened? You just blew your account. Okay? You just blew your account.
How did you blow your account? I'm not following something.
Okay.
I missed something.
Perfect. Good question. Good question. You started off with let's say $500 in your account. Okay. Account size. Perfect. Now, right around this zone here, okay, right around this zone here, you had a position, a sell position. Right around this zone right here. And you said to yourself, if the market comes in this zone here, because you didn't see any of this right here, you didn't see any of this, none of this happened yet, okay? The market was over in this direction, coming down here. And you said, if the market comes here, I'm going to sell. Because remember, the market came from up here. You're saying to yourself, I'm going to sell. All right. The market came down and you sold, but you didn't realize that we had support right here. This is support. So once that market hit support, you're saying, I'm going to sell. You had what we know as a standard lot size. Are you guys familiar with a standard lot size?
Yeah.
Okay.
Yeah.
Standard lot size. Okay. A standard lot size is $10 per move. Okay, $10 per move. You enter the standard lot size to go short, to sell, but the market is not selling. You hit support. Guess what happened to the market next? Once it hit that support, it pulled back 100 pips. Now, 100 pips on a standard lot size, actually, you know what? You had $1,000 in your account. Okay, I don't want to do that to you. You had $1,000 in your account. Okay, and the market pulled back. Let's make it 1,500 because I need to take this to 100 pips. The market pulled back 100 pips. 100 pips on a standard lot size is $1,000. So right now, because the market pulled back, you are negative $1,000 right now.
I have a question.
Yes.
Sorry. The way that the arrow is showing, that's a bullish move, correct?
That's correct.
But I would read that as a positive move because I traded or I purchased stocks, and when it's bullish, I make money. When
Well,
it's bear, I lose money.
This one? You're talking about this line here?
Bear. That's bear. So if
exactly.
Hold on, because it seems like it's in the opposite direction. So if I'm starting at the bottom and I start with $500 or so, it goes up, I would make money. I mean, that's the way, just being purely graphic. Anytime the arrow goes up, it's positive. Anytime the arrow goes down, it's negative.
Remember, you can't read the future. That what I'm showing you right now.
You're saying you're saying resistance, and I'm reading it as a positive, like the item, the entity has increased in value. You're telling me it hasn't increased in value.
You got to give me a second to finish the demonstration.
But you understand my question, right?
I understand your question, but your question is way out of bounds. Let me show you. Let me show you something real quick.
All right.
Now, and then I'm going to go to the live chart to show you this. Now, remember, stocks and trading Forex, it's similar, but different. Okay? So remember, you see this huge bearish move right here. Huge bearish move. And what you have right here is called a sell stop. Okay? Sell stop.
Yeah.
All right, you familiar with a sell stop, right?
Yes.
All right. So for everyone on here that's not familiar with a sell stop is when the market is moving in a direction, okay? What you want to do is you want the market to keep moving in the direction of your order. So a sell stop, this candle that's dropping down, you want it to drop, pick up your order and continue dropping. So your sell stop is here. You want this market to pick up your order and keep dropping down. That's a sell stop. But for the newbie trader, okay, not the experienced, well, it happens to everyone, it doesn't matter. Okay, you see this right here that the market is going to keep dropping. But here's support right around this zone. Support is in this zone. You just got caught into a market reversal. Okay, this is what I'm saying. You got caught in a reversal. You're thinking that the market is going to keep dropping, but you got caught in a reversal.
So you're losing money.
Huh?
You're losing money.
You're losing money, exactly. Okay, so now when you get caught in this reversal, you didn't put a stop loss. You're thinking, oh my goodness, I'm going to blow my account. I'm losing money. I'm losing money. But then guess what the market does? Whenever you have a huge bullish move, the market is going to give you 50% of that move back.
Why?
Because there's more money down in this area. When you see these large candles like this, they got out of that area for a reason.
Right.
All right. There was a ton of money in that area. So what the large banks do is they feed the market with, let's say they just bought this pair of Euro GBP, and they put like $100,000 on this on a buy. So what it did was it pushed the market up rapidly. Once they got to an area, they take profit. They take profit, allow the market to come back down. Why? Because it's more money in this area. More traders like yourself that's sitting in this area waiting to sell. Because you saw this big bearish move right here saying that this market is going to keep dropping.
So you thought you were going to get picked up.
And you thought you were going to get picked up.
Right. So now when you hit the 300,000 point,
yes,
your entry point is still below that status, so you still lose money.
You're still losing. And this is what happens every single day to traders. When they see that, they don't know that the market is going to give them 50% back. When they see the market coming back down towards their order, what do? They stack more orders because now they're thinking, I'm going to sell in this zone. I'm going to sell right here. Let me see, right around this zone here. Put another order, because if the market comes down, I could put another order, and it's going to pick up this order, and I'm going to be a millionaire. But what happens? What happens next is the market says, you know what? Let me pick up this money right here, and I'm going back. Remember,
let me ask you something. If that was true, and I'm psychoanalyzing for a second, then all the graphs would read the same. 50% up, 50% down, 50% up, 50% down. That's not how the graphs read.
Well, I'm going to show it to you on the live chart. Okay. I'm showing you a demonstration. I'm showing you a demonstration right now. I like to start my presentations off showing a demonstration of how the market moves, and then I'm going to go to the live chart to prove it to you that it actually moves like that.
Okay.
You got to give me a second though. Okay. So now that we see that the market pulled back into the zone, you only had $1,500 in your account. Okay, you had $1,500. You were already negative $1,000. Remember those additional orders that you put in, thinking that the market was going to come back down. This time, when the market pulls back up, now you just got a blown account. But what happens next? Now the market comes back down in the original direction it was already going in. What they're doing is basically putting the fear in traders. They're taking your money, making you think they're going to give it back. You add more orders, they take more money, and then they drop the market in the direction that it was already going to go in. But remember, this is the letter M. This is what we know as a double top. What happens next is the market's going to do this. Remember this? A big move, they're going to give you 50%. So this time, we already know that the market is making a reversal move. They're going to give you 50% now. So the market goes up, 50% of the move. 50% of the move is right around this zone. Now for all, you put some more money in your account, and now you're thinking, okay, all right, I'm going to buy now. I'm going to buy. All right, the market goes up, and then what happens? It pulls back. Now you just broke even. Now you're like, oh man, it's going to sell, it's going to sell, it's going to sell. Now you're chasing the market. And then what happens? The market pulls all the way back up, creating what we know as a double top and a double bottom. But the market is not going to break out yet. It's not going to break out yet. See this move here? 50% of the move. Right around this zone. So this is what we see now. Okay? This is what we see. We're going to start to see the market does this now. I'll show you this on the chart. Before the market breaks out of a zone, it's going to retest the zone 3 to 4 times. Okay, so watch this. Watch what happens next. After this market hits this zone right around this area here, boom, it finally breaks out, going to the upside. After we have the breakout, this is what we know as a breakout, retest, and a continuation pattern going up. Now, I'm going to take you over to the live chart so I can show you what actually happens in the market. All right, so we're looking at, go to the 4-hour time frame. I'm going to go ahead and clear these indicators off. These are my breakout indicators. All right, so what we're doing, we just zoom in. Whenever I'm looking at my candlestick charts, I like to zoom all the way in and then count 1, 2, and 3. Okay. Can you guys see my chart now?
Yeah.
Perfect, perfect, perfect. Now, remember what I was just telling you, how the market makes the same move over and over and over again. We was talking about how the market goes up, comes down to give you 50%, how the market goes up and then comes all the way back down. The market goes up, give you 50%, the market comes all the way back down and then shoots out. Betty, you see what I was just talking about on the demonstration? The market, I can't make this stuff up right here. This is the actual market. It does the same thing every single day. Now, remember I told you it gives you back 50%? Well, let's grab the Fibonacci tool. This is the original push. We had the market go up and then it came down. But then we have a push from here right around the top. Okay, I'm just going to blow this up so you guys can see this. I can't make this stuff up. Okay, here we go, Betty. This is my support. Let me just blow this line up so you can see it. And then I can have any one of you pick another pair so you don't see that this was pre-planned or anything like that. All right, so here's my support. Notice how the market goes up. You got a nice strong rally. If the market goes up, it hits a resistance zone. Once it hit that resistance, look, what did I tell you? 50%. 50%. Then the market goes back up to resistance and come back down to pick up more orders. It goes back up, comes back down, and then finally it breaks out of the zone. And the reason why I said most traders would have been in the selling position, because if we see right here, we got a trend, a selling, nothing but sell, 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 sell. You don't know what's going to happen over here. You can put up your trend line. Put up your trend line from here. Let me just stretch this out. Okay. What if you put up your trend line from this high, right around this zone here, and just stretch it all the way down? You're thinking that this market is going to keep selling because every time the market hits the trend, it drops. It hits the trend, it drops. So you're thinking, oh my goodness, I'm going to put in a sell position. I'm going to put in another sell. But eventually, when the market breaks out of the trend, we have a change in direction. Okay? So we have a change in direction. All right. You guys have any questions?
Nope.
So,
No, man.
all right, Betty, that answer your question? Come back, Betty. Come talk to me. Betty. Betty. You guys, I've been trading for the past 2.5 years. I don't know everything, but my back was up against the wall with struggles. So I had to learn this. Trust me when I tell you I had to learn it. Okay? I'm going to teach you Forex, and it's going to be made so simple. So simple. Okay? Now, remember I told you the market does the same thing every single day. All right? The market does this. The market goes up. The market comes down, goes up, down, and eventually it breaks out of a zone. Okay? So now I have a special indicator that's built into my platform, which you all have it if you're using the MetaTrader platform. It's called the Zigzag indicator. Now with the Zigzag indicator, it's going to show you those M and W formations. It's going to put it on your chart automatically. Watch this. There you go. Amazing. With the Zigzag indicator, it shows you the huge M and W formation. Remember I told you if the market goes up, gives you 50%. The market goes up and it comes all the way back down. And then it goes up, give you 50%, goes up, boom, boom, boom. Look what the market does next. It does the same thing over and over until eventually it breaks out of a zone. So you can see that I'm not making this up and this is not pre-planned. I need one of you to pick a pair. Pick any pair.
Which pair you did? You just did?
This was GBP JPY.
Euro.
Euro USD?
Yep.
Yeah.
Okay. So we're going to go to File, New Chart, Euro USD. And I don't trade with my grid, so I'm just going to go to my my template. And I use this one here. Okay. Perfect. So now I just go to Insert, Indicator, Custom, Zigzags. I like to change the color so I can see it. And voila. It does the same thing over and over and over. Doesn't matter what chart you're on, the same thing over and over and over. You can go to the higher time frame. It's going to do the same thing. Your M, W, over and over and over. Here's the letter M. Market goes up. Boom, boom, boom. Comes down. You got a nice little W right here. Notice how you got your 50% move.
Mm-hmm.
Boom. Market goes up. Look at this. Look how this market drops. Look how the market drops. So I can draw my Fibonacci from the top down to the bottom. Okay. And what do you have? A 50% move.
Mm-hmm.
This is amazing. So if you see that the market is dropping down, I don't want you to chase the market. Wait until the market come back up 50%. Enter your sell position. If you enter your sell position on that 50% move and you take it back down to support, well, guess what? That's 116 pips. On a standard lot size, that's $1,600. That's $1,600 that you made on that one move.
Mm.
Amazing. Now, you guys remember what I was talking about, the strategy that I was teaching you, you know, the 3 o'clock candle?
Yeah.
All right.
Yeah.
Now I'm going to show it to you on the big screen. Okay, I'm going to show it to you on the big screen. Now, you see these white lines? I'm going to flash them for you.
Yeah.
Perfect. These are called period separators. All right, period separators. So what these lines do is they separate 24 hours of trading. So I'm going to go ahead and put up my my day of the week indicator. Okay, and that's going to tell me what day of the week it is. All right, so I'm going to beef this up to 12, and we'll just leave it like that. Perfect. This is going to tell me the day of the week. So let's just say we start on Monday. Monday is right here. You can clearly see that this is Monday. So what I'm going to be looking for on the bottom of my screen, we're going to be looking for the 10 o'clock candle. So as you can see on the bottom of my screen, it's going to say 10 o'clock, correct?
Yes.
Perfect,
Yeah.
perfect.
Yeah.
What's that, 10 p.m. or
10 a.m.
10 a.m.?
Yeah, it's 10 a.m., but it's actually 3 o'clock in the morning, New York time,
Right.
8 o'clock in the morning, London time.
Okay.
Okay, but remember the way the chart is broken down, it's broken down in GMT time. That's general means Greenwich Mean Time. That's what, you know, they used to use way before we had clocks.
Right.
Okay, so imagine, you know, it's 10 o'clock here in New York and like 7 o'clock in Los Angeles. And they said, well, we can tell you what the market is going to do because it's, you know, it already happened. Well, every trader around the world uses this same chart. So they have the same time frame that we have. Okay, so we're looking for the 10 o'clock candle, which is right here. All right, this big red one that's right here. So what I want to do now, at the bottom of it, right here, I just want to mark the bottom of it. And then I'm going to measure 10 pips down. So if you look right over here, right in price, it says 1.11641. 1.11641. Now, 10 pips down, it will be 1.11541. Not 641, 541. So I'm going to bring this down to 1.1541. Okay. Sometimes it's not going to be perfect. So this is going to be my entry to sell. So I'm just going to make this line red. Let me just bring the market over here real quick because I don't want you to cheat. Okay. And where are we? There we go, Monday. I don't want you to cheat. All right, perfect. So this is going to be my entry to sell. And then where's my take profit going to be? Now, if my entry is 1.11541, my take profit is going to be 10 pips below that. So it's going to be 441. Remember, we started at 6.4.
Yes.
Of the, 6.4 is the low of the candle. The entry is going to be 5.4, and the take profit is going to be 4.4. 10 pips down.
So
20 pips.
it's 20 pips below the entry.
Yeah, well, 20 pips below the low of the 10 o'clock candle.
Okay.
Okay, perfect. So we're going to put the take profit green, because that's money. And now this is going to be a sell stop. Okay, this is going to be a sell stop. A sell stop is basically when you want the market to drop down and pick up your order and keep going in the same direction. So this is going to be a sell stop. Now we're going to create a buy stop. A buy stop, we want the market to go up and keep going up. Okay, so now we're going to build our buy stop. We know that this is our 10 o'clock candle, which is 3 a.m. Okay, right about here, right here. So what we're going to do, same thing. Find a high, which is right there. And then we're going to go, what's this? 9.3. So we need to go 112.03. Okay, right about there. That's going to be our entry. And now we need to find our take profit. If 112.03 is the entry, 10 pips from that will be what? 113.
113.
113, yeah.
Yep, 113. Okay. 113. There we go. Perfect. Now, here we go. This is 3 o'clock, 4 o'clock, 5 o'clock. As soon as the candle hit our entry, which is our red line, we automatically enter the order. Remember, we're trading on a standard lot size. 10 pips on the standard lot size is $100. So you wake up at 4 o'clock in the morning and you set this trade up and go back to sleep. So let's see how long it takes before we make our $100. And remember, guys, I can't make this up. This is the actual market. Boom. Look at that. Okay, so this is 3 o'clock, right? We woke up at 4 o'clock and set the trade. By 6 o'clock, we made $100.
Nice.
Would that be okay? So now you can just go and enjoy the rest of your day?
Yep.
You can go and enjoy the rest of your day. You just made $100. Now, well, that was Monday. Let's go to Tuesday. Let's go to Tuesday. We're looking for the same thing, the 10 o'clock candle. Well, we found it right here, this big blue one. Perfect. So we're going to do the same thing all over again. Buy. Boom. Boom. Sell stop. 216. Sell stop. Take profit. Well, guys, you can clearly see that what position are we in? Are we in a sell position or a buy position? As soon as the market hit our red line, okay, as soon as the market hit our red line, we enter the order. But did we enter in a sell or buy?
A buy.
Did the market hit our red line? Do you see any candles touching this red line?
No.
No.
Do you see any candles touching this red line?
Yep.
Yes.
So this is a sell. Okay. Did the candles hit our green line?
Yes.
Yep.
So what does that mean when the candle hit our green line?
Take profit.
Take profit. So on Monday,
Good
you
morning.
just made $100, right? On Monday, you made $100.
Yes.
Tuesday, you just made $100. I think this is starting to look like a real good week. Okay, Tuesday, you just made $100. So far, you up to $200 in 2 days. Let's go over to Wednesday. We do the same thing again. Wake up at 4 o'clock in the morning and we find our 10 o'clock candle right here. Perfect. We find our 10 o'clock candle. So what are we going to do? The same thing again. Boom. 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 And down. Then we're going to go from the top. Boom. Okay. Tell me, are we in a sell position or a buy position?
A buy position.
Perfect. Did we hit our take profit, which is the green line?
Yep.
Okay, so on Wednesday, you just made another $100. All right, you just made another $100 on Wednesday. Now, again, I can't make this stuff up. You see it right in front of your face. Okay, so far you up to $300.
I have a question, Aaron.
Yes.
So after you set this trade up with this one, with this pair, and you could have like a split screen where you could make another pair on.
Woo! Good question. Very good question. Okay, I didn't want
a mirror. Mirror. It's a mirror. Remember the mirror you told me about?
Yes, yes. So here's the thing. Euro USD and USD CHF. Okay, so I'm going to pull up USD CHF. Oh, you're trying to make some money. You trying to make some money. Okay, that's a good question.
Those two pairs do the same.
They do the opposite. Yep, that's right. So what I'm going to do is going to take this off. And now I'm going to show you how you just made $600 in 3 days. Well, it could be $900 in 3 days. Could be $1,000. Okay, perfect. So now we're going to click on this. Bring this down. Bring this up. This is going to blow your mind. Okay, so we're going to find what's this, May 22nd. May 22nd. Find this day here. Perfect. All right, so we're looking for May 22nd. It's August. I'm on a 1 hour, yeah, 1 hour time frame. Now, when you see this, this is gonna blow your mind. All right, May 22nd, there we go. Perfect, right there. So, oops, come back. What I'm doing right now, this is called correlating pairs. What you see right now is these pairs doing the opposite of each other. Okay, it looks like a mirror. Okay, this looks like, when you see this going like this pair, let me see if I can move this one up. This one goes up, this one comes the other way. Okay, it looks like a mirror. So if you're buying one, you're selling the other one. There we go, perfect. You see this? Here we go, right here. You see right around this zone here, if we were looking for the 10 o'clock candle on this pair right here, right around this zone, look how you could have made double your money. So here's the 10 o'clock candle. This is a buy position. Here's your take profit. Okay. You hit your take profit here. So what you're going to do on this side is you're going to do the opposite. Okay. You're going to do the opposite. You're going to find your sell. Okay. And you take profit. So now you just made double. Powerful. You guys like that?
Yeah. All good.
I
So
told you I'm gonna keep it simple for you.
So you're playing both sides of the coin,
That's right.
but you can't do that with stocks. You can only play it one side.
That's why I don't trade stocks. You know, here's the thing about the stock market. Let me tell you something about the stock market. With the stock market, you know, you're betting on a company increasing in value. Okay, and anything could influence a company to, you know, go out of business or lose their money, right? So if a company goes out of business, you lose your money. Okay,
Right.
you lose your money. But have you ever heard of a country going out of business?
Right.
Countries don't go out of business.
No, they don't.
You know, so if a country's economy was dropping, it's amazing. It's sad that the economy of the country is dropping, but guess what we can do? We can get into a sell position and make money off the country losing their economy. You know, I can go over to the US dollar. I can go over to the US dollar right around this zone here. And I'm going to show you something that I found out. And, you know, this is the first time I'm actually showing it to someone, you know, to you guys around my age bracket. You know, I'm 39. So when I showed it to the other students I was teaching, they had no idea what I was talking about. So it kind of put me in an awkward position. Like I had to break things down. So we're going to look at the US dollar on a monthly time frame. And I just want to show you something, that everything is manipulated in the market by politics. Okay, when it comes down to the currency market. So we're on a monthly time frame right now. And what I want you to see is right around, you guys know when Bill Clinton was in office.
Yeah.
Around 1999 or something like that. 1990 something. So Bill Clinton was in office, right? Right around this time here. I noticed after staring and watching the charts, anytime a president, something went on with Bill Clinton, the market dropped. There were some other things that had an impact, but the market was, the whole of the scandal, the market started to drop. Now, this was let's just pull up my chart. Oh, let me go back a little bit more. There we go. I had to minimize my chart. This is Obama time right there. Here's Bill Clinton over here. So Bill Clinton, after Clinton, there was George Bush. So I'm just going to put Bush here. These are things that most traders don't talk about. And then we have Obama. And then we have Trump. It's going to make sense in a minute, and you're going to understand what's about to happen. I had to do this several times. And I was like, whoa, something ain't right. So during Bill Clinton's, term, right around this time, 1998, when that scandal came up, the market dropped. Every time a new president is coming into office, the market rise. Every time a new president comes in, the market rise. Now, you would have thought around this time, 9/11, the market was going to drop. No, look at this. 9/11, the market actually rose.
Because people are unsure. They get shaky.
Oh, okay.
Right? I mean, anytime there's an activity that people have not been through before, they get nervous and they start to sell because they don't know what's going to happen next.
Oh, okay. I like that. I like that. So 9/11, the market rose. Okay. And then as Bush was on his way out, the market is dropping. So when the president is on his way out, the market starts to drop. Obama comes in, the market rose. What happened during Obama's time in 2005, 2008 that crashed the market?
That crashed the market?
Yep.
The recession.
He didn't have no
Real
scan.
estate.
The economy was down.
Okay. The housing. The
Yeah,
market had
they
the
did a big
biggest,
short.
yes, the market had the biggest crash in
Correct.
history. This was the biggest crash during Obama's term in history. And I can't make this up. You can see over here, the market wasn't as low as it was during Obama's term.
Right.
This was the biggest crash. Now, think about it. People lost their 401k. People lost every single thing. But in the currency market, if you were trading, you caught over 4,726 pips.
Damn.
4,726 pips. Now, if I was trading around that time, I will be a millionaire. Why? Let me show you why. Because the market gives you signs that it's about to crash. The market gives you certain, you see this right here? This is what we know as a inverted head and shoulder. Okay, you have a regular head and shoulder.
Right.
This is the head, left shoulder, right shoulder. This is going to be your head. The market comes down. Now, this is going to be your left shoulder. This is going to be your head, right shoulder. The market goes up, and then we have a crash. Guys, what do you see is happening right now?
Oh.
Isn't the same thing about to happen?
Yep.
The same thing is about to happen again. The market repeats itself over and over. You see this right here? This pattern is right here. Market goes up, left shoulder, head, right shoulder, the market crash. Head, market crash. The huge head, this huge head was created during the market crash. Left shoulder, the market is now creating the right shoulder just so it can do what?
Crash.
Crash.
And
We're going to have another huge crash. And as Forex traders, we're on the right side. We're on the right side of it. Why do you think Bitcoin is growing so fast?
Because they're nervous.
Well, they're looking for a new currency.
Yeah, Trump is playing with that now.
Exactly. Look what happened last week when the CEO of Chase,
Yes.
put a statement talking about Bitcoin was a scam, right?
Right. Because they're losing money.
Now he's getting, no, not because he's losing money. No, he wanted to drop the market. He dropped the market, had everybody fear and panic that Bitcoin was a scam.
And then Chase bought millions of dollars worth. Yeah.
Right after he crashed it, he bought $56 million worth of Bitcoin.
Yep. But that's what they did in when the market crashed in the early 1900s too. No, they did that before. It's not the first time.
Yeah, they
created the fear because they were controlling the market because they had the major share.
That's right.
So in creating the fear, people sold. They bought it at price point below market point, whatever you want to call it.
Yep.
And then when it stabilized, it came back up. They made the money.
That's right.
It's another big short.
Well, now he's getting sued. Okay, he's getting sued for $27 million for market manipulation.
Yes,
it's about time. It's about time, because this is ridiculous. Like, but here's the thing: because we are in USI Tech, it didn't affect us. It didn't affect us. See, people don't understand USI Tech's concept. All right, with USI Tech, they're hedging the market. They are buying and selling at the same time. Hedging is not illegal. That's what hedge funds do to, protect their losses.
So they're manipulating the market.
No, not USI. No, they're not manipulating the market. They're hedging the market to, because the only way they're going to guarantee you up to 1% daily payout is if, the market is moving in that direction. So if Bitcoin rises, and they're in a buy position, they can pay you up to 1%. If Bitcoin drop, they can keep paying out up to 1% because they're making money on the sell. So when I first learned about that concept, I said, you know what? I'm all in. I'm all in.
So now would be the best time to buy Bitcoin or no?
Yes.
Because it's almost at 4,000.
And you know what's crazy? I made a markup last week. Someone said, make a markup of Bitcoin. They said, see if, because they never saw anybody do a markup of Bitcoin. I said, okay. So let me just go to my other chart real quick. See if I got it over here. Go to my other chart real quick. And I did a markup on Bitcoin. I want to see Bitcoin drop down at least to 29.
28, yeah, 28.66, something like that. Yes.
Hey, yep. And the reason why, because we got a gap in that location. Okay.
It was a short gap.
Yeah, we have a gap in that location. So when that market dropped down, it's going to close the gap. After closing the gap, Bitcoin is going to rise to the moon. It's going to rise. So now remember,
we can make a lot of money that way too.
Oh yeah, we're going to make a lot of money. Now remember, why is Bitcoin going to rise? Bitcoin is being traded against the dollar.
Right.
So you see this move right here that the dollar is making? This move that the dollar is making is rising. So when the dollar rises up, it's going to come down. Isn't this the M formation? This would be your M formation right here. This is your M right here. When you see that M formation, that's when the market pulls down.
Okay.
Okay. So, and you can see that all over your chart. I can go ahead and put up my, let's go ahead and put up my zigzag. Okay. Here's the first, as you can clearly see right around the zone, the zigzag is going to draw another line here, and then we're going to have that crash. It's not gonna be good for those who who's still betting on the 401k. Who's still betting on that, but it is what it is. But
say that again. It's not gonna be good for 401k.
When the market crash, you take a hit to that 401k.
Oh yes. But right now the market is hot. The numbers are rising sharply.
Yeah. I mean, it's rising for a reason.
For now,
it's a method to their madness right now. They can't just push the market straight down. They need to take it up to give the U.S. people some hope.
Understood.
They got to give.
But then now would be the time to take your money out.
Well, as soon as Donald Trump started doing some stupidness.
What do you mean as soon? He's already stupid.
Well, you're going to see
when he start moving towards December, January, when he want to make that move with the Bitcoin, signing that paper, Betty.
That's it.
When he want to sign that, when you see him take that stupid pen up.
That's
that pen work for itself.
That's right. That's right. You can see the moves that's going to happen.
All right, with you teaching us this trading business here, we could turn around now and leverage Bitcoin with it. We could turn around and trade Bitcoin.
Of course.
Same thing.
Of course. It's the same exact concept.
Yeah. Okay.
The only thing is Bitcoin moves not 10 pips, 20 pips, 30 pips. Bitcoin moves like gold and oil. It moves hundreds at a time. So when I tell you, be very careful trading a cryptocurrency that moves 100 to 200 pips in a second. It's too liquid.
Yeah, okay.
That's why I don't trade oil. Oil would be, see, look, like right now, if I want to trade oil, I can just trade it against US CAD. Because oil does the opposite of CAD. So here's gold. Let's put up my gold chart. I lost $5,000 in 2 minutes on gold.
What?
Yeah. I promised myself I will never trade gold because gold moves. So look at it. Look at the movements in gold. This is ridiculous. Gold drops down. How many pips did they drop down? Look at this. This is 179 pips. And what happened on the next hour? It moved all the way back up to the top. Who wants to play around like that?
Mm-hmm.
If you saw this big, huge candle like this, you're thinking, okay, this market is going to keep dropping. But then you just gave all of your money back.
But that's the thing when they're trading natural resources like oil and the diamond and all those minerals. That's what happened.
Now, I took advantage of US CAD during the hurricane. It sucks to say that, but let me tell you why I took advantage of it. This is oil. What happened during the hurricane? Well, people...
Oil went up in value.
Say it again?
Oil went up in value.
That's right. That's right. Oil went up and gas went up because there was a high demand for it.
Correct.
There was a huge high demand for oil and gas. And look at this. This is the week of the hurricane. So oil went up. I know it only says 35 pips, but 35 pips on a currency that costs $40 to trade. You cannot trade oil on a 0.01. The minimum on oil that you can trade is a 0.50. All right, and that's $5 per move. $5 per move. So you can see this is oil, and then look at US CAD. It does the opposite. So I knew CAD was going to drop when oil rose. So I took advantage of it. Okay, this was last week. CAD dropped. Let's go over to the 4-hour time frame. So you can see the huge move. Look at this. When oil went up, CAD went to hell. Now look at CAD. Oh my goodness. Now you guys remember at the beginning of the webinar, I said when you see a large candle break out, the market is going to give you 50% of that candle. So all we're going to do is focus on this candle. There you go. All we're going to do is focus on this candle right here. This is how you're going to make your money. See how this market came back up right around the 618 and the 50, right around that zone. Okay, right around this zone. And then the market would, you could have caught, so you know what? Oh, wow, they came up to the zone. You could have had your entry, 50, 618, 112 pips right on that order right there. What am I looking on CAD? I want to see CAD pull back and shoot back up to this zone right here. This is going to be my take profit on CAD. I want to see CAD come down and shoot back up to the zone here. That's 200 and that's almost 300 pips. What am I looking for? Oh, look at this. Look at this. One of my groups just said what I told you on CAD. Hey. I've been giving them some trade setups lately. So what I want to see is, I want to see this market. I'm going to draw my fibs. You see this big, huge candle right here? Well, I'm going to draw my fibs up. And there we go. I want to see this market give me how much? 50%.
50, yeah.
Right here. It hasn't reached it yet. So we still have, let me just tell them something real quick. Let me just tell them, take a look at US CAD. We are giving back 50% of that huge candle. Thank me later. Perfect. There we go. So I'm still waiting for this market to come down at least 22 pips. My entry will be anywhere between 47 and 50 pips. Let this market come down to that 618. Yeah, I know you guys see it. My entry is going to be anywhere between here and look at this. When I draw my trend line, Remember, I spoke to you guys in the beginning. I said the market needs to touch this trend line 3 to 4 times before breaking the opposite direction. When you look at this zone here,
You touched it 3 times already.
nope. One.
It's just the wick that touch it.
Yep.
That's 2.
1, 2. This one didn't touch. I'll blow it up so you can see it. You see that? So now what we have,
now that you blow it up, that it didn't touch. When it was like down, it looked as if it touched.
so now what you do is you draw from the last touch all the way up to here. So now we got 1, 2, and if the market keeps rising, you got to draw from the last touch up to here. So if the market breaks this trend line, it's going to go to this trend line. If the market breaks this trend line, it goes to this trend line. So we got 1. You start your count all over again. 1, 2. Now, you're probably saying this, okay, why does it do that? Well, this is just market psychology. Okay, these are areas in the market known as key support and resistant areas in the market where the market comes down, hit a support zone, and rise back up. Why did the market stop here? Because if I was to put a line right here, well, this is what we know as, have you ever heard of supply and demand? Well, in the stock market, you hear that a lot. Supply and demand. Okay, supply and demand. When you see a large candle shooting from the top, this is supply. This is when price was super high that they had to get the price out of there. They had to get some of that money out. The price was too high, and this is when oil and that hurricane that happened pushed the market, US dollar and CAD, down. Now that the hurricanes are over, the market came back up and gave you 50%. In order for this market to break this zone, we need another reason for oil and gas to be in high demand.
Aaron, excuse me.
Yes.
What is CAD?
Say that again?
CAD.
CAD.
Oh, Canadian, the Canadian dollar.
Okay.
So the Canadian dollar is paired up against the US dollar.
Okay.
Okay. There are several pairs. Like each country has their pairs. Like we go over here and let's take a look at you have Euro USD, that's the Euro dollar versus the US dollar. British pound, USD versus the Swiss. And you know this one here, the US dollar versus the yen.
You blow that up a little?
Huh?
The thing is, when I watch it, I normally watch like the Japan, the ones that pair to US and Japan.
Okay. Now, as a new trader, I don't recommend you trade that. The reason why, because that pair alone moves fast. It moves too fast. So I would recommend for all new traders to trade Aussie USD or the US dollar and the Swiss.
Swiss?
Yes.
What about New Zealand?
The spreads are too high.
Oh, okay.
Yeah, you even though it moves slow, the spreads are too high, and before you get in profit, you'll be negative, for a while before you actually get into profit. That's another thing you have to look at. How much is it going to cost me to enter this trade?
Okay.
Most traders don't look at that. They just say, "Oh, wow, I see the market dropping." Well, when you can see the market dropping here, all right, right around this zone here. You see that the market is dropping, but what's going to happen is, let's say the market is right here. If you have high spreads, it's going to enter your order way down here. Let's say 5 to 10 pips. So you actually have to get in profit the market has to come down 5 to 10 pips before you can actually get into profit. So what if it finally comes down right around this zone? You finally get into profit like $1, and then what happens? The market pulls back up. Now you're negative again. So it's not worth it to enter the trade.
I like the way you're explaining it to me, Aaron, because from a accounting and a finance background and point of view, this is not how they teach us, and they teach us in more complex terminologies and ways, and when we have to like physically watch the live thing that's going on and try to make sense out of it, but you're showing the live thing, but I'm getting some explanation of why we make the trades and all of the ins and outs of it. But I've always been watching them, and those, maybe because the financial institutions, they go in the US Japan and British Japan and market. That's why I'm always like watching those. I'm not so familiar with the other pairs, but I do watch them early in the morning.
Okay. Now, and you know, I appreciate you saying that. And that's the reason why I decided to learn how to trade. And what I do now is I trade to find new ways to make it easier for you all. Because whether you're going on IML TV, you're learning from someone else, they're going to teach you in such a complex way using terminology that we don't even understand. It's not even an English language. You know, so I don't want to teach you the fundamental ways of trading when trading is 90% technical.
That's what I'm realizing now, because since say the early 90s, like from 91 to 90, I'm trying to figure out all of this trading and things from an accounting and a financial perspective and statistic perspective, but I realize now that it's not that technical.
You're right. It's because this is what they don't expect, you know, someone like us to get into the market. And when I say someone else like us,
I know what you're saying.
You know, they don't expect us to get into the market. They want us to continue working a 9 to 5. They want us to be dependent
on them,
them. So if they crash the market, they want to be able to say, you know what, we're going to put these people on government assistance so they can charge you more in certain things. But I wanted to become a trader so I can be a part of the 1%. So I didn't have to pay the taxes that, you know, everybody else is paying, you know.
Right.
And as a trader, one thing they won't tell you as a trader, I'm about to get myself an offshore account. Yes.
Those sink like Titanic so fast.
Well,
I've lost so much in offshore banking.
Well, the way I'm going to do it is, you know, because my wife, she's from Santo Domingo, and it's different from the Forex market versus the stock market. In the Forex market, remember, your broker is all around the world. So we're trading, my broker is from Santo Domingo also. So I use Trader's Way, as you can see right here. So with my broker, let's say I open up a, I have an address over there in Santo Domingo. And what I'm doing is every time I trade and I do a withdrawal, I'm sending it to my bank account in Santo Domingo. I don't have to pay U.S. taxes on that money.
But can you do the same thing in an exchange, or like a virtual wallet? Because a virtual wallet is like your own bank, right?
Yes, but as soon as it touches your bank account here in the United States, they want to know where that money came from.
Okay.
So what you can do, there's ways around that, is to get a debit, like you said, a virtual wallet, debit card. Everything is basically online now. All of your shopping is done online.
And that's where Bitcoin come in.
Thank
Because
you.
you keep your money in Bitcoin.
That's right. And the government don't know how to tax it yet.
I know.
And that's what I love about it. They're trying to find ways, how do we tax this? They can't even touch it right now.
Right.
You know,
that's why the blockchain technology is so important.
That's right. That's right. I just want to show you guys this one last strategy that I created. Okay. And Dean, you still here? He probably stepped off. But this is one strategy that I taught Dean about 7 months ago. He didn't know anything about trading, but when I showed him this right here, it basically, you know, because he couldn't get all the other technical stuff that he was learning. But I said, you know what? I got a new strategy for you that I created. So what I'm going to do here is, you can see these little triangles on the top of my candles. Now, if I was to tell you, find the highest candle on my chart, it'll probably be difficult because we have so many candles in this area. You probably say, maybe this one the highest, maybe this one the highest. I'm just going to make it easier for you by going to indicator and fractal. The fractal is going to pinpoint the highest candle by putting a triangle at the top of it. See that?
Okay.
Perfect. So now all you're going to do next is you're going to look to the left and you're going to count 2 candles, 1 and 2. Then you're going to look to the right and count 2 candles, 1 and 2. You're going to put a line at the bottom of the lowest candle. Okay. And then you're going to put one at the highest candle, right around that zone there. Okay, perfect. So with this strategy that I created, what I want to see is, I'm going to go ahead and measure this out. This strategy right here made me a lot of money. That's why I say trading the market is technical. It has nothing to do with what's going on in the country. So we don't know what happened over here. All we know is we're looking for the highest candle, look 2 to the left, 2 to the right. Then I'm going to measure the
50% of that.
Say that again.
50% of that.
That's right. And I'm going to put a line right here at the bottom. So what I'm waiting for, and this is where patience come in at. The biggest problem that traders have is being patient. They want to be in the market right now. So what I'm waiting for is the market to break this line here. Break that yellow line. So as the market moves forward, okay, as the market, now you notice we did not break the line. I want to see the market break and close below. This is where, you know, Betty, as we were talking before, this is a perfect example. You see that the market is dropping down, and you see how it threw a wick at the bottom, tricking the traders thinking that it's going to keep dropping. But what happens? It pulls back in the opposite direction. The market comes back down, throw out a wick, tricking the traders thinking that it's going to keep dropping down. And then it pulls back in the other direction. Now, remember what I explained to you before, the market is going to hit a support zone how many times?
3.
3 to 4 times before breaking out. So you can clearly see what happens next. Okay, so what I want to see is once that market finally break out of the zone, we get a retest to this low, which is right here. Perfect. We get a retest to this low, and now I'm going to measure this. My take profit is going to be the same measured move of this. So as we move the market, oops, wrong button. You know, as we move the market down, come on, there we go, perfect. So as we move the market down, you see we hit our take profit right around this zone here. And that right there gave me a total of 53 pips. Now 53 pips on the standard lot side is $500. How would that be? You know, nice and look how simple that strategy was. What do you guys think?
I love it.
Nice.
That's nice.
You know, and like I said, I come up with these strategies to make it easier for you to learn how to trade. And look what happened. Once the market came down and hit your take profit, it came back and went the opposite direction. So guys, remember, I recorded this webinar. It's recorded. So if you want to listen to it later on, I'll upload it for you and you can have it.
I appreciate that.
All right. So let me just stop this webinar. So what do you guys think?
Awesome.
I thank you. I really appreciate it, Aaron.
I feel blessed that I met you, and you know, I feel that, you know, we could do a lot of stuff. We could do a lot of stuff together to empower others and teach others as well as we learn and as we grow. I think it's you know, very empowering, you know, time.
Hey, I appreciate that. I appreciate it. Well, like I said, I had this webinar. I'm going to upload it. Let's see. I'll create a website tonight that you can actually. I'll create a YouTube link and I'll send it to you.
Okay, great.
All right. So this way you can go back and
I'll be a part of all your webinars. Yeah, man.
Well, I'm hosting the big webinar tomorrow.
We'll do.
All right.
Can you? Hey guys, I'm sorry I jumped back in my. My phone was overheating. I texted you that, so I missed the last couple of minutes. Are we wrapping up?
Yeah, we're wrapping up. But what I'm going to do is I'm going to save the this has been recorded, so I'm going to upload it and send it to you guys through a YouTube link.
Let me ask you that little trick that you showed us on Tuesday about getting the 10 a.m. or 9 a.m. candlestick and betting, I think it was 2 pips up and 2 pips down. Can you show that to us?
10. Oh yeah, I did that at the beginning of the webinar, so that's going to be on here also.
Yeah.
Okay.
Yeah. So all of that was, and guys, when I tell you how powerful was that, 3 days in a row, you made $100, easy.
And if we mirror it, we could make up to 600.
Yeah. Well, you can double whatever your profits, you know, going to be from the other one. So if you mirror it, it's just going to be, you know, it's going to look like this: Euro USD and USD CHF. They do the opposite of each other. Okay. This is called correlating pairs. Okay.
Okay.
So you can clearly see both of these on the same time. Yeah. Here we go. You can clearly see if you're buying this one, you're selling this one.
Yeah, he did a good job with that, Betty. When he uploaded, you'll see it.
Yeah, this is you know, a lot of traders. Look at this. Look how beautiful this is. You know, it's like an alligator's mouth. You know, the market goes up.
Yeah.
This one goes down. So that's why I love trading the Forex market, especially correlating pairs. So I want you guys to join me tomorrow.
Tomorrow, will do.
9 p.m. for my market recap. This is what I host on Fridays with Christian. Every Friday at 9 p.m. So all we're going to do is we're going to look at your losing trades, and we're going to teach you what you did wrong.
Okay.
All right. So once again, thank you guys for joining, and I'll see you tomorrow, and I'll see you next Tuesday.
Okay, don't forget to send the link, please, because I like to look at it now.
That's right. I will.
All right. Take care. Thank you, man. Have a blessed night.